All right, you guys hear me? If you hear me in the room, let me know. What's going on with this thing? Yeah, me doing runner, thank you. I don't know. Oh, hold on. What's wrong with the screen? All right, yeah, let's work. All right, I'm gonna play this disclaimer. I'll be back in 1 minute, and then we'll let Fabio take over here.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider financial suitability prior to trading. Past performance is not indicative of future performance. The software, strategies, chatbots, websites, and any associated websites, official venues, or for educational purposes only, and should not be construed as an express or implied promise or guarantee that you will profit losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment to most apples and trader, LLC, and any associated companies, agents, management, owners, and customers harmless without preservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described here. No representation is being made that any accountable is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record completely accounts for the impact of financial risk in actual trading. For example, the ability to withstand losses or appear from particular trading programs spot trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have under or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general and to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in preparation of hypothetical performance results involved, which can adversely affect actual trading results.
Alrighty. I'm just gonna hand this over. Thanks for joining us, Fabio from Menthor Q. Options, get stuff. I will hand it over to him and he will take over. If I can figure this out. I don't see him in here. Oh wait, hold on. Yeah, I do. Sorry. All right, you should have control, Fabio. I'm gonna take over there.
Sure. How do I share? Sorry, Scott, I've never used share.
It should give you an option to share your screen. If you right click it, or I'm not sure what control panel you have, but it should give you an option. Let me see here. It says you have control, so you should be able to.
Okay. Audio. Sharing.
There you go. Gotcha.
Can you see? Okay, great.
Yeah.
You can see the view. Okay.
Yep.
So I think, Scott, what I was thinking is maybe give like an intro of myself and what Menthor Q is and why we started the company, and then show you like the importance of options, especially for futures trading, and then maybe go into the chart and show you some example. What do you think?
Yeah, absolutely.
All right. So my name is Fabio. Thank you very much for having me, Scott, and thank you everyone for listening and being here. My background is, so I started in finance in 2007, working for Bloomberg, first in London and then moved to New York in 2014. I was selling their platforms, selling their data, and I worked closely with probably the largest institutions in the world. Like I was selling data to large quantitative funds, and I kind of saw the shift in from traditional finance to more like quant finance, where we hear every time, you know, Citadel, Jane Street, and all of these guys are actually using like quantitative strategy to actually outperform the market. So that's when we kind of started like being interested in more like the alternative data side. And that's when we kind of like came up with the idea of like using a similar approach that is used by large institutions, where we take data which is complex. In this case, we're using options data, and we're going to explain why in a second. And then basically we simplify it. So take this complex data, which is very heavy, it's expensive, we simplify it, and then we try to give actionable insights for retail traders in a form of what you will see today, levels on a chart that can kind of simplify the way you see the price action in the market. So the first thing is, if we go back to what happened in 2020, we saw kind of like a shift in the market and a shift in trading, right? You know, with the lockdown, with all the GameStop saga, Robinhood, the number of accounts increasing. So now it's really easy for everyone to create an account and start trading. And as a result, we saw a massive increase in options volumes over the past 4 years. And we believe that this trend is actually here to stay, and we actually will see a continuation of this trend. So that's why we started developing models that are looking at options that can then give you an idea of where the price could go, even if you're not trading options at all. So you can actually use our levels even if you don't actually trade options. And the reason is really simple. So we need to look at the market dynamics, right? So everybody knows what market makers are, but market makers become way more important when we talk about options, because probably 80 to 90% of the option transactions are executed by market makers. So that becomes important because market maker is executing, providing liquidity, and taking on a huge risk on the other side. And we have to remember that their business is not, trading directional trade, but is actually making money from the transaction. So therefore, what they do every day is they hedge. So when they take a position, they delta hedge so that they can be delta neutral, so they don't have price movement risk on the other side. So this is why this activity and this delta hedging activity coming from the option market creates what we call reaction zones. So here what you see is kind of like, in here we have the chart of the gold future from June. Is an old chart, but it gives the point where we see our levels, and we're going to talk about the levels, which is our core resistance and our put support. And on the right hand side, you actually see another chart that comes from our model, which is really the gamma exposure chart coming from the option chain. So as you can see, those two big levels there will become reaction zones if the price approaches those levels, and we're going to explain why in a second. I don't know if, Scott, you have any questions, or I will keep going.
Yeah, you guys put questions in the, should be able to put it in the GoToMeeting question box if you have questions. If not, throw them in the Discord room if you are members of the trade room. Otherwise, if you're not, put them in the GoToMeeting questions section, and I'll read them off to you if they come in.
Yeah, makes sense. So as we mentioned, obviously the market maker is taking a risk. They need to hedge throughout the day. And the reason why these levels are called gamma levels is because even if you don't know much about option, you need to understand why is gamma very important. So gamma is really the change in delta of an option for a unit of change in the price of the underlying. So gamma is a derivative of delta and defines the speed of change of delta throughout the day. And this becomes very important because, especially when we look at the 0 DTEs flow, so the option expiring on the same day, because that could actually cause a massive price reaction coming from this change in delta throughout the day. So again, gamma can be positive. So long position have a positive gamma, short position have a negative gamma. When we talk about long position, we're talking about participants buying options and participants selling options. So if we see a lot of selling of options, so if you want to collect premium and you want to sell option, this will have a negative gamma. And if you see people buying options, this would have a positive gamma. And that is important for you as a trader, because knowing if we are in a positive or negative gamma environment throughout the day, even at the futures level, will help you understand if we are in a low volatility environment or a high volatility environment. And the reason why this happens is because of the way market makers tend to protect themselves in a positive gamma environment. So again, positive gamma means that more people are buying options than selling. So we are long gamma and long options. When that happens, the market makers would go long the underlying when the price goes down and would go short when the price goes up. So that tends to stabilize the volatility in the market. So the price swings are kind of like stable throughout the day. If we then go into a negative gamma environment, then we see the opposite, because the market is actually selling more options than buying. And the market makers would short when the price goes down and go long when the price goes up. And as you can imagine, that force in this kind of hedging activity can actually have an increase in the market that can cause kind of volatility to go higher. So as a takeaway, as a futures trader or as like a stock trader, knowing in which condition we are throughout the day will help you understand if the volatility of the market could be low or high throughout the day. Then we basically provide, and we're going to show you in the chart, different levels, and we're going to explain what they are. Our levels are divided into primary levels, which is the one that you see on the left, and secondary levels, which is the one that you see on the right. The first one is really our core resistance level, which is the strike price that has the highest net call gamma. So that means that if we take a very simplistic approach, this is a strike where you see the largest call gamma or call open interest, and you see that big bar, big green bar here. So that means that a lot of participants are actually buying probably out of the money calls at that strike. And that is an indication that they think that the price by an expiration date could actually reach those 19,000 in this case. So those are kind of institutions or retail that are really betting on the option market to go to that price, because if that happens, then the option that was previously out of the money will be in the money by the expiration. And that becomes a reaction zone, and we can explain why. And then you have the put support level, which is really on the opposite side, the widest red bar that you see in this chart. We show you basically the highest put gamma and put open interest. So basically, a lot of participants are now protecting for a potential downside at the 17,800 level, and that is an area that will become a reaction zone as the price can approach that level. Then we have our we call it high vol level, or HVL, which many refer to as the gamma flip. So we talked about the importance of positive and negative gamma. This is the area where the market would change from positive to negative. And this is important because if we go below the high vol level, then suddenly we will see an increase in volatility. If we go above the high vol level, so the price goes above the high vol level, we see kind of like a more stabilization in the market. And then we have our one-day expected move indicator. So the one-day expected move indicator, which is one of our main indicator, allows you to understand the potential volatility band for the day on the upper side and the lower side. So why is this important? Because you could use this level as a take profit target or as a stop loss target, and you could also define a potential reversal trade, and we can share also some example as well. Let's look at some backtesting results so that we did on the SPX index about the one-day expected move. Here what we saw is that we had a success rate of the one-day minimum bar of 87.62% and a success of the one-day maximum bar of 85%. 85%. When we look at success, and we have some documentation we can share, we mean if we provide you the one-day minimum indicator, how many times the day after the price closed above the one-day minimum, and how many times the next day the price closed below the one-day max. So you have an 87% out of 4 years of data where the price closed above the one-day minimum in the next day, and 85% the price closed below the one-day maximum. And that's important because, again, if you are on a long trade and the price approaches the one-day max, you know that statistically you could actually potentially take your profit, because 85% of the cases the price tends to reverse back. And similar to the other side, if you are, for example, in a short trade and the price is going lower, you could use the one-day minimum as your kind of stop loss target for your trade, for example. And we did the same exercise on stocks. Here you see similar results. So the indicator is very, very strong, and you can use them in many different ways. And then finally, we have our JAX levels. So we saw the widest green and red bar, and then we also have our secondary level, which are reaction zones that are secondary, meaning that there is less gamma exposure at those strikes, but they still become a very relevant reaction level. And I'm going to pause there, Scott, and I don't know if we got questions.
Don't see any right now. don't see any right now.
Okay, so if we go back to our Discord, let's look at some of the charts that we have. So if we take, for example, the SPX, this is how we normally start, kind of like our morning routine, where we start from SPX and we want to see, for example, the first thing we want to see is what is the gamma condition of my asset? Are we in a positive or negative gamma? What is my expected move for the day, right? Plus 1% or minus 1%. Are we in a bullish momentum or bearish, right? And then we would go and look at, for example, the same chart that we saw. We want to see basically if the market is positioned more on the call side, more on the put side, and we can kind of look at these key levels as areas for our day. We can also look at the different expirations. So if you, for example, trade futures, a lot of these have what we call 0 DTE options. So options that expire on the same day, and monitoring the 0 DTE flow is also very important because they could actually cause a lot of price swings throughout the day. So here we have, for example, the same graph for the expiration of today, and then we also have tomorrow and the next month and so on. So you can kind of see how the market is repositioned at different expirations. And then we have a lot of other charts, but the key thing is really now adding the levels on TradingView and all the other platforms. So here what we have is we have the levels, we have our indicator right here. We added the level, and I show you how you can do that as well. We can have our chart, our table right here. So we can see basically how far from the spot price we are for any of these levels. Yeah, and then we can monitor all of these. So we have it for all the different futures. So we have, for example, gold. I just loaded this up today. Yeah, so this is a very good example. We have our high vol level right here is acting as kind of like a support pinning level. We saw a massive break of the 1-day minimum, and this is on gold this morning. And we also can do it on crude oil. See how this level kind of reacted. We're now all the way through here, found a reaction there. And then also, like I'll show you the markets that we cover. So if you're looking at futures, we cover indices, so NQ, RTY, ES. Commodities, we have crude oil, natural gas. Metals, we have, doesn't show here, but we have silver, palladium, platinum, gold, and copper. Then we have our rates, which are the four kind of like rates futures, so 2 years, 5 years, 10 years, and 20 years plus. We have our Forex futures, so main currency pairs. We have Bitcoin, and also we have soft commodities like wheat, corn, and soybean. In terms of other integrations that I want to mention, we are now integrating into Ninja Sierra TradingView, and we are coming up with a bookmap integration at the end of the month. So the data will be integrated there as well.
When did you say the bookmap will be available?
At the end of November. Yeah.
Perfect.
Yeah. So we'll be integrating there. So that's very exciting. And the integration will be really easy because we will integrate via API. So all you will need to do is really put in an API key, and then the data will update automatically on the charts.
So there was a question. It's going to be the cloud notes or the on chart. It's going to be on chart, right? I think you showed it to me, which is even better.
Sorry, say it again. What's the question?
Whether those levels are going to show up in the notes, the cloud notes section, or the on chart but you already showed me it's going to be on the actual chart, right? For
Yeah.
bookmap.
So we're gonna use like an bookmap add-on. I'm gonna send it to you as well. So it's basically part of like a bookmap add-on that we're gonna use that will basically show up like as lines on the chart. So the visualization will be very, very similar to this one.
Right, that's good.
Yeah. But the cool thing is that you wouldn't need to upload the data every day. On bookmap, you will be automatically updated.
Because right now you have to upload it on TradingView by manually, right, every day.
Yeah, so TradingView has some limitation on what we can do with the platform. So the indicator works really well, but we will need to, we have our bot. So within our Discord, we also have a bot that allows us to request the data. So for example, if I wanted to see the chart that I just showed you, for yes, in this case, we can plot the chart. We can actually go back up to 5 days and see any changes in this chart. And then we can kind of like also get the data for the levels. We can upload this and we just simply select, copy, and then paste in the input section. The system does automatically plot it, and then you have all your ticker right here. So every ticker that you have imported, kind of like we'll have the levels there. Another thing that I think is important is that we have levels for both the underlying asset and the future. So these levels are actually taking the future option chain, not the converted. So a lot of like other providers would show you the converted from SPX to ES. We actually have all three of them. So we have ES, we have SPX, and we have SPY if you wanted to convert SPY. And then what the indicator can do very easily is I can actually add our conversion. So let's say that I also want to add the SPX level to ES. As you can see here, now I have my converted level right here. So the one which have a bracket are the converted from SPX. I could also convert SPX levels to anything. So a very good way is like converting, for example, SPX to Bitcoin. There's a lot of strong correlation there. So I'm basically looking at, take a look at this. So here I'm using the SPX gamma levels on the Bitcoin future, and I want to see where those reaction zones could be.
Yeah, that's definitely cool to see.
And then you could use correlations. For example, we see a lot of reactions coming from, for example, if you trade gold, you could use the Aussie dollar future that has a very strong correlation. If you're using copper, the Aussie dollar future correlation is very strong. If you're using crude oil, then the Canadian dollar correlation can be very strong. So you could actually use those levels for trading those assets as well.
So what leads what? Crude leads Canadian, or Canadian, you put the Canadian on the crude?
I would put the Canadian on the crude. So if I go here, I would go on my list and I would do 6A and 6C. So I would then copy these levels here. I would go on the indicator right here. And then what I would do is I would convert from 6A to gold, and from 6C to crude oil. Click OK. Then we go back on crude oil. So now we see our 6C kind of levels right here. Then if we go back on gold, we see our Aussie dollar right there.
So talk about these levels a little bit. We were talking about it. It's just traditional, like, it's support. These levels are support until they break through, and then the resistance. You see that a lot, correct?
Yeah, so basically, like we can think about those. So we can trade those in two different ways. So one, obviously for reversers. So if we take, so at the back, let's take this chart, right? So we see that this big level here is our core resistance, and the red level here is our put support. So clearly you see a very wide green bar right here, 6,000 level right here. So imagine what would happen. So we're looking about options, right? So the market is buying probably out of the money call option at the 6,000 level because they believe that obviously by the end of the year, maybe, or by the next month, the price could reach that level. So let's imagine that we are right here, so the spot price is 5,814. So we are about 200 points away from this core resistance level. So right now, the delta of these options will be very low because we are far away from the option potentially being in the money. So the probability of that option ending up at 6,000 right now, maybe it's probably like 20% or 30%. On the other hand, the market maker is only needs to hedge that 20% delta because that's the risk that they're taking. So if nothing happens at expiration, the option expire worthless, and there's nothing that the market maker has to do. But let's imagine that now, like Nvidia comes up with earnings report, and suddenly the market becomes very bullish, or there's an event, the CPI results, and the market starts moving towards this kind of level right here. Your options that you hold as an investors are basically going to be worth more, and the delta of those options will change because now the probability of that option being in the money is higher than before. So your delta might move from 20% to maybe 50% or 60% or 70%. So as an investor, you are making money on those options. As a market maker, you're risking more now, and you need to hedge more. So you're buying more underlying as the price goes up. So that means that this also has an inflection on the price. And once we approach these big bars right here, as an investor, you most likely are going to sell or monetize those calls because always think that the option have an expiration. So as the price approach your strike price, you're not going to take the risk that the price would reverse and you would lose on those contracts. So as we see monetization on those contracts, then suddenly, on the other hand, the market maker doesn't need to hedge anymore. So they're closing down their longs, and therefore that causes a reaction in the market. That's one way of looking at that. The other way would be, okay, let's imagine that the market is very bullish and that they think that 6,000 can be broken and now we can go to 6,200, right? What you will see here is investors will monetize those calls and would open up calls at a higher strike price. So they would roll the call to a new strike. And that would also cause a stronger reaction because as this level gets breached, then suddenly you see like a strong reaction because those calls are now in the money. They're not out of the money anymore. And that's the typical scenario that we see in the case of the GameStop example. I don't know if you guys remember those gamma squeezes was exactly because everybody was holding their in the money calls, and the market makers had to buy more securities, and that kind of caused a massive spike in the price because we see those gamma squeezes. And on the opposite side, you can think about the same when we go to these put support levels. So the market makers are shorting when the price goes down. So basically, as investors approach the strike price, they would tend to monetize those puts. And as a result, the market maker doesn't need to short anymore. They are closing the short, and this causes a reaction to the upside. Let me know if it makes sense. You guys have questions? Or? Can you hear me, Scott? I don't.
Sorry, my mic. Do you hear me now?
Oh yeah, sure.
Hello?
Yeah, I can hear you. Hi, can you hear me?
Can you hear me, Fabio?
Yeah, I can. Can you hear
Hello?
me?
Can you hear me?
Yes. Yes.
Sorry, I don't, my microphone came unconnected or something. I don't know what happened there. I was getting a
Okay.
new hardware alert. Anyway, sorry. Yeah, I understand it. So, I mean, the other question is, so it's like, it's a magnet until it gets there and then it's resistance. Right? I mean, unless obviously the options start filling in above, right? So it's like, so do you use that as targets per se? Like
Yeah.
yeah, okay.
So you could use them as targets, as a reversal point. So similar to what you would use in kind of technical analysis terms, but the difference is that these levels are coming from the option markets, which is where the institutions are trading. So it's basically like having those on your chart would allow you to have a better understanding of what are the key areas that could potentially trigger institutional money to potentially come into the market and cause a reaction. So it could become a resistance or it could become similar to a breakout trade, an inflection point.
Got it. Anybody have questions in today's market? So can you get a question? Could you give some examples, actual examples in today's market? Well, one, I just saw the gold just popped off there. There was a volume event, even though it was sell ice. You're not using the iceberg stuff, which it would probably behoove you to look at eventually. I'll show you that stuff. But there was a volume event right at that HVL in gold, and it bounced right off of there.
Yes, in this case, like as you can see, the morning open, so see the core resistance acted as a resistance. So for the whole morning, the price was pinned between those two big levels here. So as you can see, I mean, if we go back to the chart, so we can open the same chart on gold. So if we look at our next checks, obviously we have stronger bars towards the upside. So as you can see, this white green bar is going to be a very, very hard level to break. And you saw it all the way through here. So from even like from yesterday's session, you saw that this kind of like was the barrier of those levels. So this could have become a short signal or a short trade ideas, and then obviously the break of this put support level and high vol level 0 DTE. So this is really looking only at the 0 DTE options, which are very important, because if the volume is high and those strikes change very fast, then the delta hedging activity kind of like increases. So you see like move to the downside, we break the 1-day minimum with a strong move, and now we're kind of bouncing off that level here.
So do you ever so if you go back to that bar chart or the bar, yeah. So do you ever like take off levels, because even though all the levels are on there, you look at this and say, okay, I just want the largest gamma levels, and I'm going to take off the rest. Do you ever do that, or did you ever consider coloring these, making these lines thicker or automatically based on the gamma level? I mean, as far as
yeah.
the size of the options area.
That's a good, yeah, that's a request that we got. We don't have it. There's also limitation on what you can do with TradingView, so you can't really do that because, you know, the inputs is like, as you see here, so we wouldn't be able to do that on TradingView, but we could potentially do it on Bookmap, for example. That's an option, definitely. So I normally, yes, I would keep maybe the top 5 levels, top 5 jacks levels, and then the way we kind of like apply the principle. So we apply basically, so the levels will become kind of like our main decision-making point, and then we use kind of like areas. So we start drawing our kind of like target areas, and then we would trade in between those areas. So if I use basically our gamma levels right here, I can draw my lines right there. And then if I then take out the levels, now I have the areas where I would want to be trading and the areas where I don't want to be trading. So those would be kind of like level to level, kind of like scalping throughout the day. But at the base, you are basically using the JAX level, and this would be, for example, if the price were to move to the upside, that would be kind of like your kind of target area right there.
So in this example here, would you just by eyeballing this, would you think this would come back to the 1-day minimum just from experience, or how would you read this as far as just by looking at this? Would you think since it bounced off the HVL, would it come back to the 1-day minimum? Would you have that as a target?
So that could be, yeah. So for example, if you obviously think in this case that the high vol level is strong, and if you're thinking on a long trade, then your next target would become, yeah, the 1-day minimum or this area right here. So always think in areas. Don't just look at the exact like tick level. I always look at things in areas. And then another thing that we would do is if you want to take intermediate target, you can actually use your Fibonacci retracement to kind of define areas in between levels, because obviously the move here is quite high. So if you wanted to just take some scalping and take obviously few points, a few ticks, you can always kind of like design kind of like your areas where we could see a potential rejection.
Right. Yeah, this is where I think the real-time volume stuff that I look at with the stop iceberg indicator, I think that would really enhance all of this. It just like it enhances any areas that I look at. That's what I have my important areas, but I don't trade those areas unless I see a real-time volume event in the stop iceberg indicator. And you can use the same stuff with this, make these even stronger.
It's really like, if you look at this, for example, right, let's go back to this chart. So if you just simply, look at technical analysis, and we go and we draw our, let's say, support level, right? So let's say that, okay, you short right here. This is like a breakout trade, massive downside. That's an amazing trade. But then how do you manage a trade? Like, how do you like take your profit? How do you kind of like look at how far can the price go? So we add this level, and suddenly you have a clear path of where the price could potentially stop. And because it's backed by institutional levels, options data, and so on. So if you are, as a risk management, if the price breaks right here and goes to the high vol level, clearly is an important level that could be hard to breach. So you also don't want to give away your profit. So you could have like trailing stops or trailing profit, like kind of moving down towards here to make sure that you do have a successful trade.
So how, bring up silver if possible, the levels. So I want to get your opinion on, because I covered at one of the levels today and it went much lower. So I wanted to see what your opinion is of how you kind of judge, you personally, if it's going to blow through that level. Right, so I got I got short above that GEX3 off a volume event, and I can show that when I get the screen back. But I got out all of them actually. It was already a nice trade, but you see it went much lower at those two levels, the 1-day minimum and the put support, and it blew through. So how do you judge from what you look at? How could you gauge whether it's going to potentially bounce there versus rip right through it like it did?
So in this case, for example, if we go back to the chart, and let's take the chart of the silver. So obviously the break was this bar here. So you see that obviously below that, there is not much there. So it becomes an important break because it's a big reaction level right here. So the break of this, basically you don't have a lot of like put activity, or like compared to this one, below these levels for this contract. So then what you see here is as we go through the break, you see a strong momentum to the downside, which is a reaction level from the break here. So in this case, basically this area was rejecting in a sense that the bounce back didn't happen. So the first candle shows you like a strong break, and that could become an inflection point right there.
Right. Okay, yeah, another thing I saw here, I'm seeing it later, of course, but and I can show
Also, the eyeball level here. So think about when we are above and below, the break of the eyeball level also causes the volatility to increase. So if we go back to the slide, positive, negative gamma, when we break that level is typically when we see volatility increasing, and that's what we saw like in a very strong downside here.
Right. Do you hear me right now?
Yeah.
Okay, so yeah, when it did break that 1-day minimum, I had a ton going on. I didn't see it. I'm not seeing it until now, but there was heavy relative volume coming in too. So that's another way, we judge our areas too, where you can say, okay, there's somebody unloading here and it may just rip right through this level. But you're saying many times if it breaks that high vol level, it has probably a way better chance of ripping through the 1-day minimum and put support if it broke to the high vol levels, right?
I think it goes back to, if we go back to, sorry, let me try and open that chart again. So if we go back to the deck here, and we scroll back up to this slide. So imagine the eyeball level being the cut through price where we are moving from positive to negative gamma. So clearly in negative gamma, the way the hedges work is different from positive gamma, and that contributes to kind of like a stronger volatility. So if imagine the market maker is shorting when the price goes down with high volatility, here you see that obviously if a lot of people start selling, then the selling activity comes into like a loop, because also the activity of market maker is actually increasing these moves right here. So if you see a lot of volume coming in and investors are kind of selling, the more the price goes down, the more the market maker has to sell as well. So basically increasing the move.
And then that put support is the level between positive and negative?
No, the high vol level, HVL.
Okay, so that's what you use to judge whether it's positive gamma or negative gamma?
Yes, so the HVL would be, if you look at in the case of silver, would be this level right here, the 33.45, and the put support is this level right here, right below 33.25. And also you have two levels very close to each other, so the break of those two is also increasing the reaction because it's two very big levels there.
So how else do you read this as far as like, it looks like all the call activity, there's a ton of call activity up there. So do you also read it like these call holders will be getting out or trying to cover some of their call? Like how would you, like if I just look at this, I would say, hey, we're going to be heading up there. But as it moves lower, wouldn't some of these guys be underwater where they want to cover their calls and say, okay, I guess it's not coming up here type of thinking? Or do you view it that way?
Well, if they cover the call, you wouldn't really necessarily see like a reaction because those calls are probably going to be out of the money. So it wouldn't really impact it. It would impact more if they start like increasing their put area right here.
Got it.
Absolutely. But I also think that, there's expiration. So, those calls are not really expiring only today. So if we go, for example, if we open another chart, and we look at our NetJacks multi-expiration, then what you're saying has a lot of sense. So for example, all expiration, the chart that we saw below before, looks at the all option chain, so all the different expiration in the futures. But here we're looking at like just today. So today you see there's like a very strong red bar right here. So those are options expiring today. So if we see a break of those levels, then, because of the time to expiration, that's going to have a much bigger impact. And then tomorrow we see a similar kind of like scenario where you have all those big red bars right here.
Right.
And I mean, the answer is very easy. Like we have a big earning week this week. We have the election next week. So even though the market might be bullish on the longer term, there is a lot of uncertainty on what could happen over the next few days, you know?
Right.
Order filled. MQ1 entered.
So for example, if you look at for November 25th, where most of the gamma is expiring, overall the sentiment is towards the upside. But if we look at today's expiration, then we have a lot of like kind of like put protection right there.
Right. So are there any other examples from today, like more common markets that people follow? Because not everyone trades silver, obviously, like anything in ES and NQ that you would have seen that gave you a heads up on this massive break?
Yeah, I mean, we saw obviously strong move. Like we saw, like normally a break of the 1-day minimum would be one of those. We typically see that if the price breaks above the 1-day max or below the 1-day minimum, we typically see like a strong like trending day. So today we are down at 1 point, or we down? Yeah, 2%. Yeah, so it was a really strong trend. I mean, obviously a lot of it is defined by news activity, you know, all the earnings that came out yesterday. Yeah, so, but here you see like, you know, put support acts as a support, moves all the way to Jax 3, and then suddenly we get the news, boom, break of the put support, reaction zone, boom, all the way down.
And then what do you make of there's no levels below here? So what does that tell you?
So the levels below is really that we provide, we're gonna change the way we show this, but we provide number of level within a range. So the reason that you don't see levels below, it doesn't mean that they don't exist. But if you come, for example, back on the chart and go on ES, we do have levels below. It's just that we don't provide all of them because otherwise it would be too many levels on the chart, but we do have like those areas. So for example, the 5,750 areas is now becoming a reaction zone. So if you don't see it there, you clearly saw it from the net gamma exposure chart. So now we are, you know, look at this, you know, like.
Right, that's right where it bounced.
Yeah, the bounce was exactly on this kind of like bar right here that we saw. So this bar right here, you see it's a very big bar. So yeah, so we are at the 5,750 here.
Yeah, and there was some buy icebergs down there at the low too. I mean, sell ice came in as well, but buy ice came in initially, and it's basically held that level pretty well.
This is a big reaction zone. So if, for example, we see a break below this area, then that could be, you know, a very strong reaction to the downside. But I think let's see what happens. But the market kind of seems to have kind of stalled around this 5,750.
All right. Couple questions, well, at least one here. So the levels are only for daily. Are there smaller time frames available?
So the levels right now, no, they can be used intraday. So they, you know, we provide them once a day, but they can be used throughout the day, and we update them every evening at around 11 p.m. With the new data. So yeah, you can use them throughout the day. Yes. And in November, at the end of November, we're going to come up with intraday levels as well on not directly on futures initially, but on indices, ETFs, and stocks. So you could potentially overlay the intraday SPX levels on ES at the end of November.
Cool. And then Jordan says, have you put SPX and SPY on the ES chart?
Yeah, sure. So what we can do here is if we go in the settings, we can go scroll down and you have a levels conversion settings. So we can type in our ticker. So the ticker is the ticker that has levels. So we would have to input the levels of the ticker right here, and then we would convert it to yes. So this is what asset do you want to see the levels on. We have them right there, and you can do the same thing from SPY to ES. And the only thing I need to do, I need to go and get my SPY level because I didn't upload them yet. So I go on the bot, I take the SPY levels, copy them, putting them in one of the boxes here, and now you would see basically the different SPY level. It's a lot of levels, but what our users tend to do is they tend to create areas where you see a lot of congestion of desires. Like for example, you see a lot of primary levels like in this area here, then you see a lot of like levels in this area here. So you can kind of build those areas with the different levels. And the reason why SPX and SPY are important is because if we go back to the chart, they have different option chains. So think about who is the customer that buys SPY and who is the customer that buys SPX or ES, right? If you look at SPY, most likely it's going to be pension funds, asset managers, even retail investors that are adding SPY into their 401k. So, you know, the period, so the time horizon for SPY is probably more towards the longer side. It's not day traders that would just trade SPY and that would, you know, move a lot of the option activity. But if you look at SPX or ES, those are like the hedgers. So the big hedge funds that are hedging, they're using futures, or the big funds that are protecting themselves, they're using zero DT options and so on. So always monitor the three in conjunction because they could give you different idea and indication of what could happen.
Okay, and then I got a question. Did I see the code available somewhere? Could I use the code to write script for eSignal, or is it already available for eSignal?
When you say the code, meaning like, we don't have an indicator for eSignal. Like you could create one and you could come into the bot and get the data. So yeah, if you eSignal, we haven't come across it, so we don't have an indicator there. What we do have is we are building out integrations. So we do have already an indicator for Ninja, for Sierra, for a MetaTrader, and we're going to come up with the Quant-Hour, Bookmap, and then TrendSpider are the three next one that we're going to do. And they'll be connecting with an API. So if you, for example, build an indicator for eSignals, please come to us. We'll work with you and we'll get it over. We'll get it done.
And then they said when we do integration with Bookmap, you already covered that, end of the month, end of November. And then any chance for Motive Wave support?
We get a lot of requests, so we are trying. So it's part of our roadmap, not our immediate one. So for November we have those two, and then for December we have TrendSpider. But then we are moving into other platforms. So we have like Motive Wave, Trade08, TradeStation. Those are kind of like in our target area. It really depends on the platform because some of them allow you to connect to them, some of them don't. So we really need to understand what the options are. But yeah, definitely Motive Wave is on our radar for sure.
Okay. No other questions yet. There's someone typing. I'll tell you when that comes through. And then, you know, when you're done with this, since I'm having some issues, it'd probably be good to go like just bringing the levels in. It's probably good to show everybody because I've had some issues today because I thought we said we wanted, before I get into that, Jordan says, ask Fabi to go over education available on his website.
Sure, makes sense. Yeah, thank you, Jordan. So if you create, so first of all, if you go on mentorq.com/free, you create a free account and you get access to our account dashboard. Actually, let me log in 1 second. One second. Okay. Can you guys see my screen?
Yep.
Right, so once you get access to the account dashboard, you can connect your Discord account and join our server. You have a series of getting started steps right here, but we also have guides. So if you come here and you say, okay, I want to understand more about your levels, for example, I'm a futures trader, show me what you have, and we have like some documentation right here. But then if you look at our products and you want to look at gamma levels, here is like, what is the core resistance, right? What does it mean? We have a document on it right here, and that shows you everything that we went through today. On top of the guides, we also have our academy. So if you go under academy right here, and you can go under the free academy to start with, you are getting started. So how can you use, how can you create an account, connect to Discord? How can you use the bot? So we will show you how to use that. How can you add the levels to TradingView? And then why is market reaction zone so important? And then also, if you go on our gamma levels course, if you click on free again, we have also a lot of other stuff. We have product training, how to set up your trading plan with Menthor Q, blind spot level, but we have our gamma levels course right here. And this goes into great detail. We have about 6-7 hours of training here to show you exactly how to use each of these levels. So how to use the core resistance, how to use the put support, the high vol level, the one-day indicator, etc. So there's a lot of videos there that are really, really helpful.
And all that stuff's free?
So you get access to the free stuff. So the free course is right here, which is the one that you see. There's about 10. If you then want to also use the premium one, so for example, if you click at the premium, we're going to do a live trading event next week where we're going to be live trading for 4 days ahead and after the election. So we're going to do market preparation before the election day. We're going to do trading preparation during the day, and then we're going to start the trading session at 10 p.m. and then we're going to do another live trading session of 3 hours at 9 a.m. and then we're going to also trade during FOMC on the 7th. So that would be part of the Premium Academy. And also, yeah, you have a lot of other courses. For example, within the Premium Academy, we also have we also have like our Futures Trading Club, which is right here, which is really 27 trading sessions that we did back in July on how to actually, from the moment you take the levels, the moment you build your trading plan, and what are the things that you look for. So our traders went over all of that stuff.
And then what's paid? Are the levels paid or they're not paid?
Yeah, so basically, if you look at the membership, so we have 2 types of membership. So yeah, the levels would be paying membership. So you have our basic membership and our premium membership, and difference is really the usage. So our basic users get 10 queries per day. The premium one gets unlimited. So it really depends how much data you need. So if you're only trading ES and Q, then maybe the basic is enough for you to get access. If you're trading a lot of different assets and you also want to look at all the different charts, then obviously you might need the premium stuff.
Okay. And then I got a question. Would this replace Spot Gamma or complement? Maybe have Fabio compare them. So are you familiar with Spot Gamma?
Yeah, sure.
So because I know they've got some stuff, you know, they've got the hero that's real time. They have the 0 day to expiration that's real time. That information is pretty much real time. So like, I think it complements it. I don't know. I mean, what's your take on it?
I think if I can, I don't want to talk bad about anyone. So I think, yes, Spot Gamma is definitely an amazing tool. They have real-time stuff on just SPX, I think. And then they have the hero on stocks. What I hear about feedback from our users is that our levels on stocks are more precise because we have a better coverage of all the gamma levels on stocks. The SPX and the indices are very similar. We also have futures, which Spot Gamma doesn't have. So if you see, for example, if you use the future that spot gamma has is actually the conversion of SPX. So we have actually futures levels. So we are the only company that we came across so far that have futures levels. So essentially it really depends on the use case. So I would say try them out and see how they compare, and then see how you find them in comparison.
Right. I mean, the main thing for me too is, you have them on, I can tell my room that's why I want to go over how to bring this stuff in. You have them on all these other products. So it's like crude, gold, natural gas, grains. It's like, you can't, as of right now, you can't get that from spot gamma. They're focused mainly on the SPX, ES, and you do get the levels for NASDAQ and Russell. But if you're watching other markets, which I'm watching many other markets, you get all the levels for all these other markets, which is key.
I also think the important part is that so if we go back to the option chain of these assets, so clearly the SPX has the most traded option. So in terms of volume, has way more option volume than ES or SPY, right? But like if you are looking at these three pictures, right? So here we have SPY, here we have ES, and here we have SPX. The picture tell you different stories. Maybe the main areas would be very similar because they move in tandem, but having access potentially of the option chain of all the three assets, I think is very key, because sometimes it could be that the futures market move differently than the spot, and having access to the future option chain, so the option chain of the actual futures is very key. And we see that those levels actually work really well. So we have one of our users is testing NQ levels right now, and so far over 3 months he had a success rate of 69% over like 3 months. So we're going to build more and more backtests, but having those levels is very, very, very key, I think, because it's looking at the direct option chain of the actual futures. So
Right. And then this code you gave me, this link for the code that gives them 20% off. Is that correct? I'm going to post this.
Yeah.
I already posted that. Any other questions, guys? And then, or else I'm going to see if do you have a couple minutes, or you got to get off now?
Absolutely.
Yep. I'll just show you the issues. Unless you want to go over anything else on your end.
No, did you have questions about how to get the levels in the charts, or I don't know if you want?
Yeah, let me share my screen again so we can do the education for dummies. Since for some reason I can't figure it out.
Want me to stop sharing my screen?
Yeah, I can do it from my end.
Okay.
Do you see my trading view?
Yeah.
Okay. All right, so this is the issue I was having. So first of all, I thought you said we wanted these all to be Z24, right?
That's just for the commodities. Not the indices. You can keep the generic. It's just the commodities and the metals that you want to have the actual monthly ticker.
All right, so let me use an example. So if I have this, so first of all, how do you just, so every day you should want to get rid of these, so you remove them and then bring in the new ones. Is that what you do?
Yeah, so I would go, if you go in the bot within our Discord.
Okay, hold on here. Okay.
I don't see, I see a different screen.
What screen are you on?
I'm watching the SI indicator course right now.
Huh. All right, hold on. You got it now?
Yeah.
All right, yeah, it was on.
If you type, so / would allow you to unlock the bot, and then you type the TV futures command, the second one. Yes. That would give you basically, click enter. That would give you the levels for the kind of index side. So it would give you the NQ, ES, QQQ, SPX. So you would copy that, and you can use those levels on the generic ticker for NQ and ES, because the futures contract for NQ and ES only rolls once a quarter. So the generic works well with the trading view. It really matches the trading view kind of like screen. But when you start looking at monthly contracts, in particular crude oil or metals, that's when you want to have the actual future ticker there instead of the generic.
Okay, so first of all, I was misunderstanding before. So it's not going to put all of these levels on my one chart, right? So if I select ES here, so first of all, let me just redo this and see if it gives me the error sign like it was doing earlier, right? So if I hit that, if I remove it, and then I bring it back in, right? Click on that and I paste what I just copied.
Yeah.
Yeah, so see, this is the issue I'm getting, right? So user defined error. So what, is it just because it's on Z?
Yeah, because look at the ticker. TradingView treats the generic, even though the generic is using the December contract, it's a different ticker. So you will need to have the generic ticker there. So if you click on the drop on the arrow there, just select, take away ESZ 2024 at the top. In the ticker, just type yes, and then select, click on the arrow again and select the ES1. No, click on the arrow down on the left. You see this, you can open,
Okay, got it. Okay, so now if I bring this in, oh, they're there. Okay, good. Oh yeah, so I just misunderstood because I was putting Z for all of these. So you're saying using for crude, gold.
Yeah, so when the input has to match the ticker that you have open on your chart. So if you have ESZ on the input, then obviously you need to open the ESZ chart. But if you have ES1, then you would need to open the ES1 chart, I guess.
Okay, and then the issue I had, so for YM, there's no options, but you bring in the DIA. So I tried that earlier and I already had this on here. So see, I was giving the error signal here, but I have this. Oops. I have the conversion here. Is it still because I'm on Z?
Yeah, it's the same thing, yeah. So if you go on YM1, you should see it.
All right, so I just misunderstood that when we had our meeting. All right, then, perfect. So those are the die. You can see bounced right off of that puppy. What else did I have? And then what correlation have you seen with these other ETFs, like as far as GLD? Do you put those on here on like gold and the USO on crude, or do you just leave it for the option?
Yeah, we can do that, or you could use the blind spots, which is already looking at correlation. So for example, if you look at GC and crude oil, you could actually use our blind spots indicator. So I know we might not have time today because
Okay.
basically like blind spots is the same principle about what we did with the conversion. So we converted, SPX to ES and SPY to ES. The blind spots are actually doing that job already. So we calculate the most correlated assets to the future that you're trading, and we would plot those levels in the chart. So for example, for gold, we might be looking at the Australian currency, or we might be looking at other assets that could be correlated, and we might be looking at the ETFs as well. So GLD, IAU, or all of that stuff. And for example, for crude oil, we do exactly the same. We might use USO as an input. So when you look at those products, you can actually use the blind spot level as well. So you go on the bot, if you go on our Discord, if you type /BL underscore levels and just type GCZ 2024. Yeah. Then you copy that text. And what you need to do is open another instance of the indicator. So open the Menthor Q levels, another one. Yeah, just go on indicators. And yeah, open another instance, copy that text, and then apply. And now you would have your blind spots level right there.
Interesting.
If you go on the settings of the second indicator that you added,
Here.
You can also scroll all the way up, and you can do level offset in the middle there. You can see that you can move that and put like maybe 150 and click OK. So that would move those labels towards the right side. So yeah, so just drag the chart to the left.
I see.
So that becomes more. And again, if you have a big resistance area, like in this case where you have core resistance and BL9, so you have a big core resistance, and then you also have a blind spots level, then that becomes a stronger reaction zone.
Right. So coming back up, you would naturally think this would be a good resistance level if this makes it back up here.
Yeah, because you also have the BL1 level right there.
Oh, that's pretty cool. I think that was it for my issues.
And for YM, for example, besides DIA conversion, you also have the blind spots. So because YM doesn't have options activity, using the blind spots also can be very useful.
Okay.
So you can go back in the bot and you can request the BL//BL and then levels, and then you type in YM1 exclamation mark. Yeah. You copy that. Yeah, put it in maybe the second indicator, or if you have that, or it doesn't matter. You can
Just put it at the top row.
Yeah.
And then you can offset it if you want, but yeah, that's cool. Okay, and then the other thing quickly. So when you put all these in, I don't see, like I didn't see SPY in here.
Yeah, the reason is that there's a limitation on the number of characters that you can have per message on Discord, and we can only have up to 5 tickers due to that limitation. So you can only have about 2,000 characters for every message that Discord sends, for every request, I would say. But SPY, you can get it just by downloading the list command and requesting it separately.
So then I go list.
Yeah.
TV list.
Yeah. And then you put SPY, and then if you want to add other stuff like NVIDIA or all of that stuff.
Okay, let's just do SPY for now. So then I take this, if I just put it in the box, or do I have to do the conversion?
No, put it in any of the boxes.
So just this.
And then just go to SPY, change the ticker at the top.
Right, but if I want it on the ES, how come it didn't populate on ES?
Because you need to do the conversion.
Yeah, so I have to do the conversion of that. But you're saying, so SPY, if I just put in SPY, the level should already be there, right?
Yeah. So if you want to open the SPY chart, then yes.
Why is it not?
I don't think you're on TradingView. I think you're on.
It's like crypto. Again, I don't use TradingView either. So I'm starting to now, but hopefully you get it on Bookmap, it doesn't matter. So if I put SPY in here. So then how come I got that?
Because probably if you go back on the settings of the indicator, go into the setting. No. Yeah, go into the indicator settings.
What indicator?
That one, the Menthor Q. Yeah, that one.
Oh, nice. Sorry.
Okay. Yeah,
Okay.
you don't have SPY there as an input, so you would have to copy it again.
Oh, I see. I know this is pretty basic for most people, not me. Once I get it, I get it. It's just initially, it's just.
I know.
I don't get it. All right, let's try this. All right, awesome. And then if I want to bring that in here, then I go here and then I go in the settings.
Yeah.
Go into the settings and then I go down here.
Yeah.
And then where
Tick the box first.
Type in SPY.
Yeah.
Gotta be in stocks.
No, it's the wrong one. It's the wrong ticker.
Which
Yeah,
one
just
is it?
type enter. Just type enter. You should be okay.
Yeah, that's what I did. Is that all right?
Yeah.
And then, oh, there.
Then you have to tick on the box where it says from.
Oh,
But the other thing that I don't think you have the input of SPY on that indicator. So you might want to scroll up. No, scroll the way up. You see you don't have SPY there.
oh, I see.
Yeah.
Nice.
Yeah, so look at that balance of the put support of SPY.
Right. Wow. Yeah, because I was saying there's nothing below. I mean, I guess you can go to that chart, the GEX chart, but this, I mean, that bumps right off of there too.
Yeah.
Very cool. All right. Any other questions, guys? Let's see. I think there's one more in here. Oh, you said this. Okay. How do you get levels in Ninja? This is the last question.
Yeah, Ninja is very easy. So I don't know if you want me to share my screen.
Yeah, let me back to you real quick. You should have control of that.
Okay. Can you guys see?
Yep.
So Ninja is very, very simple. So you would first you download the indicator. We have a guide that will show you how to set it up. And then every morning you just simply download the file. So the file right here is basically already has all the levels for all the assets right there. So you just basically, for Ninja, it takes less than 20 seconds. You just download the file, upload it, and then the levels will be already there.
So why would anyone even use TradingView if you have the, if you,
Well, TradingView, I think, is the most used platform. So it's it also allows more customization. Like the Pine script language allows you to kind of build more stuff. So like we have a lot of more things on the TradingView indicator, and that was the first one that we developed. But yeah, the Ninja one is also a big one.
right. And then I'm most excited about Bookmap because that'd be awesome to just have all that stuff right on the heat map.
Yeah, and also like with Ninja, Sierra, and all the others, we'll be connecting the APIs. So again, this activity of uploading the levels, you will not have to do it.
Awesome. All right, there's one more question typing and then I'll let you go. How soon is you already talked about that, curious, end of November for the Bookmap.
Yeah.
Could it come earlier or it's definitely set end of November?
We're doing one product release at the end of November. So yeah, I mean, the study is almost ready, but we're not gonna release it until the end of November.
Okay, and then how long do we have to use the coupon code, my link?
Yeah, no, there's no expiration, so you can use it anytime.
Awesome.
The other thing, if you use it for next week, you'll be able to then access our live trading. So the live trading will be streamed here. So all of these events will be right here for those days.
Awesome.
Yeah.
Great. This has been very educational, very, very cool stuff. I mean, the more I watch this option stuff, it's a wonder how I traded without it for all these years. But I mean, especially when you're overlaying what we're looking at with this option stuff, like I just don't know of a better edge on the planet, to tell you the truth.
Yeah.
Very, very exciting.
Okay, awesome. Yeah, if you have any question, guys, yes, send it through Scott, send me over. And then if you want to do this again, happy to do it, whenever you guys want.
Yeah, well, maybe we can do another one in a week or two.
Yeah, absolutely.
And everyone's saying thank you.
Thank you. Thank you, guys.
All right, great. Thanks, Fabio. Talk to you
Bye-bye.
soon. Thanks. Bye.